Want to welcome on today's guest, Mish Schneider. Mish is the Director of Trading Education at Market Gauge, coming to us from Santa Fe, New Mexico. Mish, great to see you. Welcome back to the show.
Thank you so much. Happy Valentine's Day to you and staff.
To you and Keith as well down there. Would love to talk about this market environment. We had the CPI number this morning. Inflation, I feel like, has been a word that many of us have had to live with and focus on very, very much recently. We get another data point, bringing it back to the forefront of our thinking. You have a couple charts to help us think through inflation, starting with silver. Talk us through your thoughts here.
Well, because there's so much talk from the Fed every day, and because we have so many indicators that come out on a daily basis with opinions ranging from a super cycle of inflation, which is the camp I'm in, to disinflation to deflation, I thought that I would bring three charts that would help people make their own decision about whether or not inflation is going to pick up. And this is regardless of whether or not we saw CPI get a little hotter. It still was in a decline. Food was excluded, but food prices have come off a little bit. All of this can make it very confusing. So there's a plethora of instruments to look at to determine, and certainly I didn't include DBA, and maybe we'll have a chance to look at that after we finish this, but certainly one of them is silver, and particularly the relationship between silver and gold. And I think the biggest argument that I get when I talk to people on Twitter about how I'm wrong about a super cycle inflation is by looking at the silver and gold saying they're just not moving. And of course, let's see what that means relative to what. And right now, you really want to look at what silver is doing versus gold, number one. But if we just look at the chart, I gave you a weekly chart purposely, because if you like a drop to support, certainly a drop to the 50 and the 200-week moving average is, in a word, gorgeous. If you're a technical trader, you know right away if you're wrong, if it breaks down under those moving averages, although we do know that the metals have had a history lately of looking horrible and then being the best buy. But nonetheless, if they hold here, I think that's a really good indication that we've seen a correction. And it's worked independently of the markets that have rallied on an expectation that the Fed would be less aggressive. This will really tell you whether or not all of that is working if silver holds here and starts to go up. And the other interesting thing is the middle chart, which is the leadership chart. And that is really how that price is performing relative to the benchmark. In this case, we use gold. Typical inflationistas will tell you that silver outperforms gold in an inflationary cycle, and there is a ratio level of 80 that it has to clear in order for people to think it's bullish. So you can see silver is not outperforming right now. So it seems to me like opportunity is there if you keep an eye on this. If silver starts to outperform, if it holds these moving averages, then you're good to go. And then, of course, if we look at the last chart, which is the momentum chart on the weekly basis, that too right now is certainly erring to the side of not so much for silver, but we know momentum can change very, very quickly.
Really interesting chart. And I love this one in the middle one. We often, and so often, we look at relative performance in some way measured to like the S&P or a major benchmark. This really thinking about silver versus gold is kind of an interesting way to do it, one that I hadn't thought of. I really appreciate that, Mish. Your second chart is looking at Latin America ETF, ticker ILF. What does this mean relative to the comments so far on inflation?
Well, we've switched here to a daily chart, so time frame is important. And, I obviously you and I have talked a lot, and most recently in January when we did the outlook and we talked about trading ranges and all of that. And people are used to hearing me talk about some of the more obvious commodities like we just did with silver. So I thought, let me look at a country that has two really interesting aspects to it. Well, actually, in this case, a continent, not a country. But it's the countries that make up Latin America are very oil rich and very agricultural rich. And as a result, right now, just like with silver, it's showing you that we don't have to necessarily worry, particularly in the energy and the oil market, at least not yet. So if you want to follow this, right now it's telling you that it held above the 50-day moving average. It's still below the 200. It's well underperforming now if we go to the middle, the real benchmark that we like to use, which is the SPY, although it's coming back to the Bollinger Band there. And if we go on the bottom, though, this is to me the most interesting. This is showing a divergence between price and momentum. And this is what caught my eye about this chart, because you could look at the 50 and the 200-day moving average on the momentum chart, and you see that the 50 is clearing the 200. So even though the price hasn't had a golden cross, the momentum chart is showing that it's having a golden cross, and the dots are above the moving averages. So that's telling you momentum is picking up, but price hasn't caught up yet. So if you were just looking at it as a typical trade, you would say if it clears the 200-day moving average, couple of days, that's a good signal. You have a good tight risk. But if you're looking at it with the eyes of when should I really start worrying about inflation, put together with the silver and the gold, look at this, because if it clears 26, it's telling you that these countries are starting to be able to get away with pricing their commodities even higher.
Right. So 26, that would take us above the January peak there, be a new high for the year. It's interesting when we're looking at something like Latin America, obviously a big commodity component to that area of the world and their economic conditions, but the dollar has certainly been a big part of the story outside of the U.S. as well, right? Dollar had an incredible run through much of last year, really weakening recently, and now chopping around a little bit. How much, when you're looking at something like the dollar, how much of that is part of your thought process looking outside the U.S. and whether or not something like that would be a good opportunity?
Well, that's a great question, because the dollar has relationships against commodities that are historical, and then times where the dollar breaks with the relationship with commodities. So right now, we're very much in the line of the dollar is weak, and therefore commodities have been able to go up along with equities. But there's a whole other factor that's happening with the dollar right now, and that really is the siege of fiat currency in general. And I think it's really interesting, you mentioned it at the top of the show about Bitcoin, that even with the market going down, Bitcoin is starting to do better. At least it's holding range more towards the top. And the fiat currencies right here, even though the euro has done better relative to the dollar, both are still under siege. And of course, then we have the Japanese yen and everything that's going on in Japan. But the biggest issue with the dollar that I'm watching is what happens with BRICS. Yeah, sure, BRICS story has been going on for 10 years already, but it's getting a lot of publicity lately as more and more countries want to be able to price oil, especially with what's going on with Russia, especially the countries that deal with Russia, where we have embargoes, in something else other than U.S. dollar. So there's two things to look at. Yes, one is the relationship, and if the dollar goes up and commodities still go up, that tells you don't count on that relationship. Two is if the dollar really gets under siege and drops, obviously that's very inflationary. And three is if we start to hear anything more from a geopolitical standpoint about dollars not being used to price things like oil, that would not be a good situation for the United States.
A lot of question marks seem to remain no matter what here. Your third chart, just to finish up, Mish, is looking at natural gas. Now, a bit of an outlier in the commodity space, one that's been underperforming for quite some time. Talk us through this chart if you could.
Again, I tried to bring things that were somewhat controversial that would support the argument of inflation, not so much, but yet would be really, really good to watch in case all those people turn out to be wrong. And natural gas is a great example, because one of the reasons why it went down so much was because obviously Europe had a much warmer winter and were able to really store up their supplies of natural gas. And so people were like, that's it, supply chain over, storage problems over, plenty of natural gas, we don't have to worry. And even myself didn't look at this chart really for a long time. We had this splendid run buying natural gas at around 7 and then adding at 11 and getting out at 17 and 18. And we haven't looked at since. But it caught my attention because look at it now. It's flatlining, number one. Number two is if we look at the relationship there again against the benchmark of the SPY, It's not that far from getting back on par with performing against the SPY, possibly even outperforming, which it hasn't done, by the way, since September. And if we go down to the mean reversion or the real motion chart, you could see we had a mean reversion really actually back more towards the beginning of the year. And momentum has gone sideways. So if we take out the recent highs of momentum, it's possible that with the nice rounding bottom we're seeing in natural gas, it's giving us an early warning sign that everything that you're hearing about the complacency in terms of any future energy crisis, especially as Russia continues to might up as we're hearing, don't again be so complacent about the idea. You put this all together, if you get oil-rich countries and agricultural countries and silver starting to pop up against the gold performance, and you start to see natural gas go up, I don't care what anybody says, it means the Fed is once again being caught behind the eight ball and inflation will continue to rise.
This has been so helpful. We only have about 30 seconds left, but I'd love to just throw a random name. This is Exxon Mobil, one that made a 52-week high going into the weekend. When you're looking at the energy space, it has had such a good run. I know with your background in commodities, particularly in agriculture and other areas of it, what do you make of this sort of sector that has had a run? Is it time to be looking for opportunities for pullbacks? Is this a trend that you see continuing? How would you play a name like this?
Well, yes. I mean, right now you have obviously the spike high and another period of digestion. And I would look back at the support that we saw somewhere in November, December at those highs right there, up near the highs there. That to me would be a good basis of a risk. I don't like to risk too much when you're buying these high momentum type stocks, but nonetheless, it certainly fits the narrative of everything we talked about, number one. And number two, oil exploration in general has been doing well. And there was a little comment made during SO2, and I know I'm going over my time, but he said something about oil and gas, he being the president, for the next 10 years is going to be important, and maybe he's going to relax some of the standards of drilling. And if that's the case, you're going to get companies like Exxon that's really going to be able to take advantage of that.
Mish, this is awesome as always. Thanks for giving us some time talking through the charts. Stay safe and be well down there in Santa Fe. We'll see you soon, okay?
Thank you so much.